Hi students, in this session also I am going to discuss one of the practice question related to the calculation of weighted average cost of capital. In this session I selected the past paper question from year 2017, question number 5.4. So in this slide I have included the paper. Please go through that. Uh, you can identify as we did in the last session, as I discussed with you. Here also same method we need to adapt it. Please take few minutes and go through the sum. Then you can identify the what are the sources of capital here. Then here point A, you can identify. Please follow up the my mouse point. Issued share capital. So first of all, it's saying about the ordinary shares. So here what we need to do now, you can identify. We have to calculate the cost of capital related to the ordinary share. Then under ordinary share capital, we discuss some methods to calculate the cost of ordinary shares. Here you can identify the point. Dividend paid for the year just ended was 80 per share, and growth rate of annual dividend payment is 5%. So here you can identify that here, as they are going to adopt the 5% growth rate here. So definitely cost of capital of ordinary shares here need to calculate using dividend growth model. In addition to the ordinary share, there is a retained earnings also. As I discussed with you in last session, there is not any market values for the retained earnings, but as this is something sacrificed by the ordinary shareholders, definitely there should be a opportunity cost in here. So even though there is not any market value for retained earnings, this retained earnings also, as it is a sacrification of the ordinary shareholders, there should be a cost of capital. But in weighting, if we use the market value basis, we should not consider retained earnings, as retained earnings are not having the market value. Then irredeemable preference shares are having 100 million. It's easy for calculation. Then irredeemable non-quoted long-term borrowings are having interest rate of 15%. Then in addition to that, income tax of this particular firm is 28% per annum. Here we are going to calculate. Here this should be not A, it should be O. Cost of ordinary share capital, cost of preference share capital, and cost of debt. Then we can get the weighted average cost of capital. Okay. Here, let's calculate cost of ordinary share capital. No need to remind. Same method we are going to adapt with the method which we used in last session. Here, going to adapt again. So as you are aware, here in the sum it is clear. Growth rate is having for a period. For dividend, so dividend growth model can be adapted. As we discussed again and again, we can use this equation for calculate dividend. So here D1 divided by P0 into G. Here in the first point A, you can identify last traded price of ordinary share is 750. That means D0 is 750. As you aware, now you can calculate D1. How to calculate D1? D1 equals to D0 into 1 plus G. You know the G, you know the D0, then simply you can have the D1. And P0 refers to the market price. Market price of this, what is that? Market price. How to calculate market price? Issued share capital. Here you can identify P0. Yes, market price, last traded price of ordinary share is 750. Then you can identify that market value of this share also 750. As we did 80 into 1 plus G, or otherwise D0 into 1 plus G, it is 84. P0 750, G 5%, that means 0.05. Then we can adapt this equation, then simply we can identify cost of ordinary share is 16.2%. Then we need to calculate according to the given details cost of preference shares, as we did few times in last few sessions, or now all of you are aware, cost of preference shares can be calculated D0 divided by P0. Here in the given information, irredeemable preference shares. With the term preference shares, as I explained to you again and again, when it's become preference shares, there can be two types of preference shares, irredeemable and redeemable. When it's become irredeemable preference shares, we need to adopt this equation. When it's become redeemable preference shares, we have to use the IRR value. When you go through the past papers, in last few past papers, there is not no checkings regarding the redeemable preference shares. So sometimes in next paper it can be evaluated. So go through the sessions, be aware each and every source and each and every alternative of ways of calculating cost of capital of these sources. So here D0, what is the value belongs to D0? D0 is 28. Here it is given. How to identify? Yes, it's given. Annual dividend per share is 28. The last traded price is 200 at easy. It's easy. Now KP, cost of preference shares, 10%. 28 divided by 280. Dividend divided by the market value of the share. It's easy. Now let's move to the debenture. When it's become debenture, when you heard the term debenture, you should be aware there are two types of debentures mainly. What are those? Having a market value, not having a market value. When it's become not having a market value, there are another two methods, redeemable and irredeemable. When it's become redeemable, it in preference shares also, as like in preference shares, we have to calculate the IRR value. Okay, keep in mind. But when it's become this case, it's irredeemable, non-quoted long-term borrowings. So it's going to be not having a market value. Okay, then what we need to do here, let's say here I have adopted main two ways. One thing is, as the interest rate is 15, normal equation is KD equals to K1 minus T. Why here we are using 1 minus T? All, as all of you aware, these interest expenses are deductible expense when it's become tax calculations. So that one, that means when we calculate in the cost of capital also, that taxation we need to be adjusted. That's why we are adjusting with this tax rate. Here one method is we can calculate the interest expenses. How to calculate interest expenses? Here it has been mentioned, non-quoted long-term borrowings were 110 million. Then if the value of our borrowings is 110 million, 110 million, please follow up the mouse pointer, 110 million into 15%, then we can calculate the interest expenses as 16.5 million. 110 into 15, then if it is 106 no 16.5 million, we can use that one. Then 1 minus t can be adjusted. After tax adjusted net impact will be 11.88 million, because that tax expenses is going to reduce when interest expenses are going to increasing. ආදායම අඩු වෙනවා. එතකොට වියදම් වැඩි වෙනකොට බද්දට යටත් වන වියදම් වැඩි වෙනකොට ගෙවිය යුතු බදු ප්‍රමාණය අඩු වෙනවා. එතකොට අපිට net impact එක අඳුර ගන්න පුළුවන්. අඩු වුණ බද්ද මේකට adjust කිරීමක් මේ කරේ. එතකොට 11.88 11.88. Now what we can do, for we have actually incurred a cost of 11.88 for this 111 million of debt. මේ මිලියන 110 ගන්න මිලියන 11.88ක පිරිවැයක් දරන්න සිද්ධ වෙනවා මේ ණය වෙනුවෙන්. එහෙනම් 11.88ට බෙදන්න ඕනේ මිලියන 110න්. ඒක ප්‍රතිශතයක් බවට පරිවර්තනය කරන්න. What we need to do, we have to incur 11.88 million LKR cost of debt for this 110 million. So 11.88 divided by 110 is the cost of debt. I think you got the point. Okay, then I have included the alternative way also. Without doing these calculations of the actual interest expense, what we can do, we can adjust this interest rate for taxation. Here 0.15 is the interest rate. Then if we adjusted the tax of that for that, then we can get the cost of debt 10.8%. Now we calculated cost of capital for each and every source. Now what we need to do, at the end they are asking cost of weighted average cost of capital. Now we can go for calculation of weighted average cost of capital. Here when it's become ordinary, now we have identified the sources of capital: ordinary shares, retained earnings, preference shares, debentures. Then we can put the market values for these sources. Now ordinary shares market value 750, retained earnings 0, preference shares 180, debentures 110. You may be doubtful, even me, I am doubtful why we put this 110 here, but normally we are practicing to put this 110. As you aware, there is not any market value for these debentures because as they are non-quoted, but we had to incur that cost by rupees. So normal practice is, if you go through the IM Pandey's book, if you go through the finance management book, you can identify they have put this mark, even though it is a non-quoted debenture, normally they have adapted this 110 also as a market value. So here also, as those most of those books also use same method, here I also put this 110. මොකද්ද මං කිව්වේ non quoted වෙලත් ඇයි debentures වල market value එක 110 දැම්මේ කියලා. නමුත් ඔයාලා පොත්වල ගියොත් එහෙම විවිධ පොත්වල ගියොත් එහෙම ඒ පොත්වල දාලා තියෙනවා මේ 110 market value එකක් විදිහට. හේතුව තමයි එයාලා ඇත්තටම මේ පිරිවැය පිටටද දීලා තියෙනවා. මේක අරන් තියෙනවා. එතකොට ඒ නිසා එයාලා ගත්ත මිල මාකට් වැලියු විදියට අරගෙන weight එක කැල්කියුලේට් කරලා තියෙනවා. නමුත් ඇත්තටම මේකට වෙළඳපළාගයක් නැහැ. වෙළඳපළේ transactionable නැහැ මේක. නමුත් වෙළඳපළ තුල ඒ ගාන අරන් තියෙන නිසා තමයි 110 මාකට් වැලියු එකක් විදියට අරන් තියෙන්නේ. නමුත් retained earnings වලදී එහෙම නැහැ. ඒකේ මාකට් වැලියු එකක් විදියට ගන්න ගානක් අපිට දාන්න බෑ. මොකද ordinary shares ලට එන profit එකෙන් ඉතුරු වෙන ප්‍රමාණය, ordinary shares holders ලගේ ලාභයෙන් dividends ගෙවලා ඉතුරු වෙන ප්‍රමාණය තමයි retained earnings වෙන්නේ. So here retained earnings means the profit which retained by retained within the firm for future purposes as reserves. So that's the rationale of this scenario. So no need to think about that much. Okay, then as we did earlier, we can calculate the weight. How to calculate weight? Ordinary shares market value is 750, then total is 1000. 750 divided by 1000, it is 75%. Then retained earnings as a zero value, then 140 divided by 1000, then 110 divided by 1000, you can get the weighted. Then how to calculate the cost of capital? Already we have calculated the cost of capital of these sources. Ordinary shares, you can see 16.2. When it's become retained earnings, that one also equal to the ordinary shares, but value not be getting to the weighted average cost of capital. Then preference shares, it's about 10%. Debentures, we identify it's about yeah, some mistakes have been done. It should be no 10.8. Yes, it's correct, 10.8% here, this one. Okay, then what we need to do, weight multiplied by weighted average cost of capital, then you can get these answers. End of the day, we have to get the total weighted average cost of capital belongs to this firm, then that one will be the bulk value of this weighted average cost of capital of each source. That means 12.15 plus 1.4 plus 1.19, that is about 14.74. That is the weighted average cost of capital of this particular firm. Okay, I hope you got something. Thank you very much. Let's meet from another practice session.